Okay. So, what are the advantages of volunteering to be registered? Number one, no hassle of monitoring turnover for past 12 months on a monthly basis. So we know that you register when your 12 monthly turnover of taxable supplies exceeds or is likely to reach 4.8. So in order to see whether you are now liable to rate of VAT, you have to continuously monitor the turnover. But if you voluntarily register, there is no need for that hassle. So that's what we mean by no hassle of monitoring turnover for past 12 months on a monthly basis. Number two, avoidance of potential penalties and interest for late VAT registration. Number three, input tax claimable on purchases from registered operators. Number four, you can escape the 10% withholding on contracts. We, the issue with the tax clearance. If a trader fails to supply you with a tax clearance, you are supposed to withhold 10% on any contract. Okay, because you can only get a tax clearance after Zimra considers all tax heads, inclusive of VAT, when issuing a tax clearance. Ah, Agumanagan. Who is joining this late? This behavior shall not be tolerated in the future. Anyway, today we tolerate. Uh, Another advantage is government tenders require participation by registered operators. So sometimes we have government tenders, but the conditions will say you have to be a registered vehicle operator. Okay. So what are the disadvantages of voluntary registration? Registration comes with its administration costs, where main expenses cannot be recovered through input tax, e.g., wages. Unregistered operators prefer to buy from other unregistered operators because of pricing. So normally we know that if it is a registered operator, the prices are generally expensive because they are VAT inclusive. So if you are in an unregistered operator, knowing for certain that you won't be able to also claim that input tax, you prefer to buy from other unregistered operators. What are the consequences if you failure to register but you are liable to register? You are liable to pay output tax that he should have collected from customers from that date. So Zimra will just say will just assume that whatever prices that you were charging were VAT inclusive, but you can't claim input tax. That is the only problem. Then number two, penalty interest on the output tax with effect from the effective date, and then there is also a penalty that can be decided by the Commissioner General as he sees fit. Uh, okay, so how does VAT work? Where do we start? All registered operators are required to charge output tax to both registered and non-registered operators. Registered operators are entitled to claim input tax on purchases of goods and or services which are for use in making supplies. We've been singing about this. So this is the formula for calculating VAT. You are going to say output tax minus input tax. You have your VAT payable or VAT refundable. The refundable should be in brackets. Okay. So this is just a summary of the registration of a VAT. The first question is, does your activity constitute a trade? If the answer is no, then don't register. If the answer is yes, Then we ask another question: is the total value of your taxable supplies more than the prescribed threshold, which is currently 4.8? If the answer is no, we ask another question: do you want to register voluntarily? If the answer is no, then don't register. We go back to the question: is the total value of your taxable supplies more than the prescribed threshold? Then, if the answer is yes, then register compulsorily. Okay, so if we go this route, when we say, okay, does your activity constitute trade? And we say, yes, it constitutes trade. Then we ask another question: is the total value of your taxable supplies exceeding 4.8 million? The answer is no. Then we say, okay, so do you want to register for VAT voluntarily? If you say yes, then you apply to the commissioner for voluntary registration. So this is just a summary of what we have been preaching. So now let's go to section 27, which talks about the tax periods. So, what are tax periods? It means regular intervals in which a registered operator is obliged to file a tax return to account for VAT. Reporting periods which end at different times, allocated by the Commissioner General on registration. So normally for VAT purposes, we have four tax periods. You can be placed in category A. What does it mean when you are placed in category A? You have to remit VAT and also submit returns on a 2 monthly period, standard tax period of 2 months ending on the last day of odd months. So what does it mean? It means that uh, in January you have to submit returns and also pay VAT, but the returns will be covering December and January. In March, you'll be covering February and March itself. In May, you'll be covering April and May. In July, you'll be covering June and July. In September, you'll be covering August and September. And in November, you'll be covering October and November. So that's why we say the standard tax period of 2 months ending on the last day of odd months. That is category A. Category B still is still 2 month period, but then the standard period is bi-monthly periods ending on the last day of the even months. So that means in February we're going to submit returns, but we'll be covering January and February, and so forth and so forth. Then category C, you have to submit returns monthly. Every month you have to submit returns. It is preserved for those large clients that exceeds 19.2 million per annum in revenue. Okay. And it also caters for delinquent true and taxpayers who needs constant monitoring. So if Zimra sees that you are a troublesome taxpayer, they will put you in category C so that they will, for close monitoring purposes, for so that they can monitor you every single month. And we have category D. Category D is it's flexible. You can pay a VAT after 6 months, or even after 2 months, or even once a year. And this one is solely normally given to someone who is doing farming or agricultural or pastoral activities. So it is only allocated upon written request to the Commissioner General. The total turnover should not exceed 9.6 per annum. Do we have questions so far? Yes, platform for questions before we continue. Ah, no one. That's strange. Eh? We don't have person.
Sir,
Eh?
I'm just seeing on this last slide that you said 9.6 million. Um, but there was another one. I forgot what you were talking about. Sorry. And it was saying nine. The slide was saying 19.6 million, but you, when you were talking about it, you said 9.6. So I thought that maybe you had just made a mistake, but now I'm seeing it written 9.6 million. So, what is the correct figure?
All the figures are correct. So the 19.2,
Yeah, 19.
the
Sorry.
19.2 is for category C. So if your revenue or your turnover is likely to exceed 19.2, you are considered to be a large client. So you are put in category C.
Okay.
And we also saw this 9.2 when exactly. I think we saw it somewhere when we were saying, I saw it somewhere. Anyone who remembers 19.2, we saw it
Yes,
somewhere.
that's the one. And when you were reading it out, you said 9.2. You didn't say 19 point.
19.2.
So that
No.
was,
It was supposed to be
yeah, you said
19.2.
9.2.
Okay.
Okay, I just wanted to make sure.
Okay. And also don't confuse this
Okay.
with the 9.6. 9.6 is for the category D. If your turnover exceeds 9.6, then you cannot be categorized in category D. Okay. Another question?
Yes, okay, that's fine.
Okay. Another question?
What if you expect that your turnover for the year will be or will exceed 4.8 million, and then you register and then you don't exceed the 4.8? Is there any compensation that happens?
No. You can still remain registered or you can apply for deregistration. There's no compensation.
Okay, okay,
Why would they compensate you? Because VAT, you are not the one who is paying VAT. VAT is paid by the final consumer. So normally the output tax should net the input tax, or the input tax should net the output tax. But because of these inefficiencies in our system, in our tax systems, we have you either Zimra will have to repay you, or you have to pay something to Zimra. So there won't be any compensation. You just deregister. Can you hear me? Okay. Okay. So if we don't have other questions, let's. Who was it? Was it Kundiso? Or you have another question? Okay. Let's cover zero-rated supplies. So a zero-rated supply is a taxable supply, but the tax charged at 0%. Where such a person's taxable supplies exceeds the registration threshold, the person is obliged to register of VAT. Registered operators making zero-rated supplies may claim full input tax in respect of goods or services acquired to make zero-rated supplies. I want to ask a question. Why would Zimura charge 0% instead of for the standard one, the 14.5? Anyone before I pick. What do you think? Why would Zimra charge a 0% on a supply, but some of the supplies it will charge 14.5%? Why would Zimra do that? Yes, yes, good. So sometimes they would be promoting something. So they will say you can claim input tax, but you charge output tax at 0%. Okay, so that was correct. Uh, so as we can see, zero rating supplies primarily applies to exports. For so that we earn foreign currency, we promote exports. So we say everyone who's exporting VAT is 0%, or sometimes certain other types of transactions which should not be a VAT for social and economic reasons. Where a rate of 0% has been applied by any registered operator under a provision of this section, the registered operator shall obtain and retain such documentary proof as is acceptable to the commissioner. This is in terms of section 10, subsection 3. E.g., the CDI for exports. So this is one of the documentary proof that you can retain, so that when the Zimra audit comes, um, they can see the proof that indeed this was supposed to be zeroed. So this is a list of zeroed supplies: basic unprocessed foodstuffs, e.g., uncooked beef, fresh eggs, mealie meal, bread, milk. Food must not be supplied as cooked or served as a meal, a refreshment, or prepared food, or any drink for purpose of immediate consumption. Then number two, exports of goods and services. All exports are zero rated except unbeneficiated chrome. So we say all exports are zero rated, but if you are exporting unbeneficiated chrome, so by unbeneficiated, we are saying you are just extracting chrome as it is, you load it in one at whatever mode of transport, then you export it. So they will start the processing outside. So this one, of course, they are discouraging people from just exporting chrome that is not processed. We know that if it is not processed, then it is going to attract a very few dollars. But if you process it in Zimbabwe, then you sell the beneficiated chrome, then we know that foreign currency will be more than when we sell the unbeneficiated one. So this is a form of discouragement. Number three, we are continuing with zero-rated supplies. Agricultural inputs such as fertilizers and seeds, chemicals, farming implements such as tractors, plows, and animal feed. Number four, cross-border transportation of goods or passengers by road, rail, or air, international transport service. Those are zero-rated. Then sale or supply of businesses are going concern to another regional operator. So you see, you see the conditions there. In order for this sale of business as a going concern to be zero rated, it should be a sale as a whole business, and also it should be a sale to another registered operator. So if you are selling to a person who is not a registered operator, then we cannot say it is zero rated. Then services are supplied to non-residents; those are zero rated. Drugs prescribed in the Medicines and Allied Substance Control Act, goods used by disabled, insurance of international transport services, the supply of day-old chicks weighing not more than 185 grams each, services physically rendered outside Zimbabwe. So that is the list of zero-rated supplies. Now let's cover exempt supplies in terms of section 11. So supplies on which no VAT is chargeable. So we call them non-taxable supplies or exempt supplies. Suppliers dealing in exempt supplies only need not to register for VAT and no input tax. So if you are wholly dealing in exempt supplies, then there's no need for you to register for VAT and no input tax. Taking for example, EY or any audit firm, they are in financial service, so they are exempt. So they have no need to register for VAT. They have no need to register for VAT. Example, supply of financial services, e.g., service provided by a bank, an insurance company, building society, an actuary or stockbroker, implies all the charges of banks, insurance companies, etc. are not vatable. Thus, these organizations do not charge VAT on their services, thus they cannot claim input tax thereon. Another exempt supplies educational and training services supplied by a person registered with the Ministry of Education and Higher Education. Yeah. NB services provided by such person to third parties are not exempt. Medical services and auxiliary services provided by any person, e.g., food at hospital. Those are again are exempt. Supply of residential accommodation, e.g., provision of staff housing by employer. Those are exempt. Then supply of piped water. Then rates charged by local authorities. Those are exempt. Uh-huh. Yes, they are standard. This piped water is it should also be for residential purpose. If it is being used by a company for production, it's not exempt. It's actually standard rated. Okay. Supply of fuel and fuel products is exempt. Take note of this one. They love it. Supply of fuel and fuel products, those ones are exempt. Local public transport, that is local transport services for fare paying passengers, those are exempt. NB, local transportation of passengers is standard rated. International transportation of both goods and passengers is rated, whether by road, rail, or air. Don't you, don't you think this slide is confused? Eh? Anyone who saw it, what is confusing? Because number 9 is saying local public transport, that is local transport services for paying passengers are exempt, but then they are saying it's now saying local transportation of passengers is standard rated. So that's where the confusion is, isn't? Uh, Local public transport, that is local transport services for fare paying passengers, it's exempt by road or rail. Then the local transportation of passengers is unrated. Let's remove this statement for now. Doesn't make sense to me. Those that have used air to go to Harare or to come to Bulawayo, did you pay VAT on your tickets? So you are not a good tech student. You should have examined the ticket. Okay. Anyway, we'll see as we go. Then domestic electricity is also exempt sale by a non-profit making organization of goods where such goods were manufactured using at least 80% of donated goods. Then supply of goods and services by an employee organization to its members to the extent that consideration of supply is limited to membership contribution. Then tobacco supplied on auction floor. Those are exempt. Okay. Uh, we have situations where we have to deem that there was a supply. So as I said earlier in those earlier sections, whenever we are deeming something, it means that actually there was no supply, but we deem that there was a supply. So these are transactions which do not generally appear as actual supplies, but are regarded by law to be supplies, e.g., the supply by an employer to an employee of benefit in the form of goods or services, for instance, the motoring benefit. The deeming provision both widen the range of transactions subject to VAT and clarify the fact that certain transactions are indeed taxable. Okay, so we need to know when do we deem something that is not actually a supply to be a supply. Okay, the following are examples of deemed supplies. Number one, goods or service taken for own use. So when you make drawings, Zumra will assume that you have made a supply. Number two, granting of fringe benefits to employees, e.g., motoring benefits and cell phone benefits. So if you are told that the employer or the taxpayer or the razor operator gave a Fortuner with two 700cc engine capacity, we have to account for output tax there. It's a deemed supply. So what will be the value of supply? It will be that amount that is deemed the deemed benefit for employment tax purposes. So if it is two 700cc, that will be in the 108,000 category. If I'm not mistaken, 108. Is that so? Uh-huh. It will be in the 108 category. So that will be the value of supply. Then it is assumed that it will be VAT inclusive. So to multiply it by 14.54114 to calculate the VAT component. Then number four, subsidies or grants received from the state or local authority. Those are deemed supplies. We have to account for VAT. Goods acquired under an installment credit agreement that have been repossessed by the seller. Then transfer of goods between independent branches, reduction in taxable use of capital goods. Yeah, these are VAT adjustments now. Then sale in execution of a debt. Ah, okay. So those are deemed supplies. So you have to take note of these ones. This might be a little bit tricky or hidden in a question, so you have to hunt for them. Are we clear? Okay. Now let's deal with two things. We need to deal with the value of supply. It is very important to determine the value of supply on a transaction because that's where we are going to derive the VAT. And it's also very important to determine the time of supply. So the VOS, it means value of supply, and TOS, it means time of supply. So when we sell a business as a going concern, we said it is what? It is zero rated, isn't? But if something is rated, doesn't mean that you are not going to account for VAT. You are going to account for VAT, but at 0%. But the question is, at what value are we going to charge the 0%? So that is the value supply. So on sale of business going concern, the value of supply is the consideration less VAT. Then the time of supply is the area of invoice being issued or payment being received. Anything that is confusing there? We say, okay, so if we are selling the business at 2 million, uh, uh, the value of supply, it will be the consideration less VAT if there is any VAT. Then the time of supply is area of invoice being issued or payment being received. That should be straightforward. What about on betting? Placing a bet on any outcome of a race, event, or any occurrence shall be deemed to be a supply of a service to such person. In the time of supply, whenever any payment is received by the supplier, then the value of supply is the consideration less VAT. Okay. Do we have any questions so far? Yeah. Yeah, this is not good. No questions. Okay, I'm tired. We continue
Let's just do
tomorrow.
this one, Nitt-Gritt.
Eh?
Yeah, we're done. The last one. No, let's just finish the info text British, then we call it a day.
Okay.
Hmm. If it's not a long topic anyway. How long is it?
The whole topic
Yes.
is 186 slides.
Like you were saying, you're supposed to spend only 2 days, and maybe you know what to cover today and you want to cover tomorrow.
I think
So,
we have actually covered most of the stuff. I think the other slides are just examples and
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 fine.
questions.
So then let's call it a day
Let me.
because we are already closing.
Yeah, I think let's call it a day. We continue tomorrow, same time, 8 o'clock. Let me save the recording first, if it's possible. Okay.